Hello and welcome to our webinar on unique investments in self-directed retirement accounts from Crypts to cryptocurrencies. We are going to be talking about the truly unique investments that we see and the investments that we really help our clients process through their retirement accounts, not every day, but on a pretty regular basis. And I know a lot of times that we're talking about real estate and real estate-based investments, and that's really just very simply because it's the #1 asset class that we hold on behalf of our clients in their retirement accounts. But there are so many different investments that you can make within an IRA or an ESA or even a solo 401k. And so we're going to be talking about that today and the deal structures that go along with those investments, prohibited transactions, and just really generally things to know when you're looking at truly alternative investments. My name is Larissa Green. I'm with Advanta IRA, and I have been with the company since 2011, so this is my 10th year with Advanta. Prior to being a part of the marketing and business development team, I worked sort of in the background and did new accounts. I helped process checks, pay expenses on behalf of IRAs, help clients make investments through their accounts, and really sort of the day-to-day of investing through a self-directed account. I've been with marketing and business development for probably about 9 years now. So I've been doing that, this portion of it a long time, and I really enjoy my job. I love getting out there, networking with all of you guys, and learning really right alongside you. So it's been a great experience for me. So today, as we go through, I would definitely invite everybody to ask any questions that you might have. I do keep the webinar muted just so that it's nice and clear. We have a nice clear recording, but you can type any of your questions into the question box and I will answer questions throughout the seminar. So as we go, please do not hesitate to ask any questions. If you guys would like the slides, please just feel free to email me and I will make sure to get the slides to you. And with that, let's go ahead and get started. I do just want to let everybody know that although we talk about investments that we've seen, we'll also talk about prohibited transactions and disqualified persons. Something that we don't do is give tax, legal, or investment advice. So that's really important for you guys because we can't provide that information or advice to you. So if you do have questions on that, let me know and I might be able to direct you to a professional that can assist you, that has assisted our clients in the past. But that's where your professional team is going to come in. Make sure you're talking with your CPA and your attorney for any advice they might be able to provide you when you're looking at deal structures and investments in general. Advanta IRA is a self-directed IRA administrator. What that means is we handle qualified funds for our clients that would like to make investments outside of the market. Our clients are finding their own investments. We don't sell anything at all, but we help them get it done in the name of the retirement account and do the record keeping for those assets. And in most cases, we also do the IRS reporting. We've been doing this for almost 20 years now, and we have our corporate office in Largo, Florida, or in the Tampa Bay area of Florida, and then we're also in Atlanta, Georgia. So that's where our offices are located. However, we can help anybody nationwide and even worldwide. So if you have a US-based retirement account, we certainly can help you self-direct that account. We talk to people just about all over the country all the time, anywhere from the Northeast all the way through to Hawaii. And I even speak to people occasionally overseas, again, that have a US-based retirement account they'd like to self-direct. We have about 1.3 billion in assets under management. We're close to 8,000 clients, and those clients are nationwide, and they're investing in everything from buying rental property all the way through to the unique investments we'll talk about today, like airplanes and alpaca. So what is a self-directed IRA? So before we jump in, we're going to talk just a little bit, do some housekeeping here for those of you that just aren't as familiar with self-directed IRAs. Very simply, a self-directed IRA is going to be a an IRA account just like any other. It's held for benefit of the individual who is the beneficiary of that account, essentially. So if it were my IRA, it would be held per IRS rules in a tax sheltered account where I'm having a third party hold that account for me. So it can't just go down to a local bank, open a bank account in my name and call it an IRA. It has to be designated as a retirement account. It's going to be tax sheltered, so it could be tax free or tax deferred depending on the type of account that you have. But very specifically, a self-directed IRA gives the owner the ability to truly find those investments that they know best. So I know a lot of brokerage firms use the term self-directed for accounts that they have where you can choose the investments that you're making, but those are going to be all all market-based investments. And so what our definition of a self-directed account is completely different. We don't hold anything that is market-based. We don't do stocks, bonds, or mutual funds. Our clients are finding their investments in the opportunities that they deal with every day. So buying rental property, for example, option contracts on real estate, private lending, private placements, precious metals, whether that's gold and silver bars or coins, platinum, palladium. There's all kinds of opportunities out there. Foreign currency exchange and futures trading. And then there's so many other things that we see, and that's really what the focus of this webinar will be today. But I do want to reiterate that it's important for you to understand that a self-directed IRA is really just like any other IRA. I think the biggest question I get when somebody's filling out the application is, which option do I choose? Because I don't see self-directed IRA on here. And typically those options are just traditional Roth, SEP, simple. And the answer is that all of those are self-directed because that's all we hold. Self-direction is actually defining the type of asset, not the IRA account itself. So the IRA account is pre-tax if it's traditional, just like it would be with a brokerage firm. It's tax-free with a Roth, just like it would be with a brokerage firm. So that kind of gives you a little bit of background on those types of accounts. And if you guys have questions on the types of accounts, my partners over in Atlanta just did a great webinar on just brushing up on the types of accounts and understanding the contribution limits and the benefits of each type of account. If you haven't heard of a self-directed IRA, it's just very simply because there's not a lot of companies out there like Advanta willing to hold private investments and handle the record keeping for those assets. So it used to be that we'd see brokerage firms on occasion holding something like a private placement or private stock for a client, but they really changed the fiduciary requirements on those assets, and I think it was 2015. And so brokerage firms really decided, even if they were doing it sort of here and there, that they really did not want to be responsible anymore. And so you're really not going to find that your brokerage firm is willing to hold, especially something like real estate. And that's where we come in. We're really not competing with your brokerage firm. We're just filling the gap in the industry where we can hold that account for your private investment. And it's not an all or nothing strategy. You can move over just what it is that you want for your private investment, keep the remainder of your funds at your brokerage firm, and transfer between the two IRAs as often and whenever you like. And so although stocks, bonds, and mutual funds are the most common investments we hear about in retirement accounts, the IRS rules have always allowed for a much broader range of investments. A lot of times when I talk to people, they say, well, this must be brand new. I had no idea you can do this. When did they start allowing it? And they actually started allowing it in 1974 when they created IRAs. It's just, again, that there's not a lot of companies like Advanta out there willing to hold these assets. And actually less than 4% of all IRA investments are truly self-directed. So that gives you an idea of sort of really the numbers behind it. Again, we're just kind of going through some housekeeping here to catch everybody up in case you're not familiar with self-directed IRAs. So just very briefly, here are the types of accounts that can be self-directed. Traditional and Roths are, of course, the most common types of accounts that we hold, but there's also employer-based plans like SEP IRAs, simple IRAs, and of course, solo 401ks. You'll also see on here ESAs and HSAs, and the rules for self-directing those are exactly the same, and so we can help our clients with those. And then any former employer plan, and there's emphasis there on former because if you're still participating in the employer plan with, for example, you're a W-2 employee, it's going to be less likely that you can make that transition from that plan over to an IRA to self-direct. But if you're thinking about it, I would encourage you to check. You never know. There are certain situations in which the employer's plan will allow you to move funds, so that's something to look into. But this will just give you an idea of what we see. For whatever reason, oftentimes I'll have people say to me, well, I can't self-direct my account because I don't have a Roth IRA. And I'm really not sure where that comes from, but that is, not by any means the limit of the types of accounts, as you can see by this by this graph here. And just keep in mind that, the way that I look at it is if it ends in IRA, it can be self-directed, and then it goes beyond that as well. So why do people choose to self-direct? And as we go through the webinar today, you are going to truly see that the idea behind these benefits is really echoed in the investments our clients are making. So a new source of capital, cash in the retirement account provides them with needed capital for an investment. So they look at an investment and say, well, I really like to participate. There's a good return there, but all of my personal funds are invested already. And they say, you know what, I didn't know I could use my IRA for this investment. And that's perfect scenario for me because it's going to be tax deferred or tax free. Stock market fatigue. I know a lot of people are sort of feeling that now in the uncertainty of the market and what's to come. And really over the last, year or so, with COVID and all the things that we have all been dealing with, there might be a lot of stock market fatigue. And so truly diversifying your investments by self-directing at least a portion of your funds may relieve you of that fear and fatigue you have of the stock market. And then of course, the tax benefits, having an investment grow tax deferred or tax free, and then being able to continue and invest on any earnings that you have is a huge benefit. So when you're looking at an investment, you might say, this is the perfect one for my IRA because I want it to grow tax deferred or tax free. So the biggest benefit that I see to a self-directed IRA is investing in what you know best. And we're really going to be looking at that today. So real estate, again, is the number one investment we see, but truly the sky is just about the limit for a self-directed IRA. So keeping that in mind as we go through these investments, and we will talk about what you can't do, but that is only a single slide. What you can do is really the point of this, and it's just such an amazing thing to see our clients with their entrepreneurial spirits and their creative minds and also putting their knowledge to work and grow their retirement account is just an amazing thing. And so, we get to see that on a daily basis at Advanta IRA. So we want to share some of that with you guys so that you can see what we're seeing and really get inspired by these investments. So a big thing, of course, that we're seeing now is cryptocurrency. A lot of people calling in asking about how to invest in cryptocurrency. How does it work? Can your IRA hold cryptocurrency? And it's interesting because I would say that there's been interest in this for quite some time now, but it sort of comes and goes in waves, just like anything else. And so lately, I've had a lot of calls on cryptocurrency. I have a lot of new accounts involved in cryptocurrency in different ways, and I'll talk about that in more depth in just a second. Farm animals and farmland, another big investment that we see, and sometimes truly creative, and then other times more, excuse me, more based around the real estate itself. So I have a couple of examples of that. We see things for transportation, so car carriers and 18-wheelers. I'll talk about an airplane investment that we saw. We've also had clients invest in sports teams. So, being a limited partner or a shareholder in a sports team, and, they can be US based sports teams, or we even have a client invested in a European sports team. So, very interesting, very creative. And as the team grows, as they have, winnings, then there's going to be growth in that investment, and the IRA will realize that growth. We've had clients invest in movie projects, and I actually was invited to speak at a film festival a couple of years ago where I had mentioned we had clients invest in movie projects, and it just so happened I was speaking to a group of realtors, and one of them was involved with the film festival, and she wanted to learn more. How did this project raise capital with the use of retirement accounts? And when I explained to her how it works, she said, you have to come, you have to speak at the film festival because there are a lot of people putting their projects together and they need to learn how to raise capital utilizing retirement accounts. And so that's what I did. Talked about the structures of the deals, who can and can't be invested with them, and what that looks like. And then last but not least, I also have on here burial crypts, and I will talk more specifically about that in just a second. And for those of you that are just joining us, I want to let you know and remind those already on that if you have questions, please just type them into the question box so I can get your questions answered as I go. So the first one I want to talk about in a little more detail is going to be cryptocurrency. And I think this one's important, especially because I do get a lot of questions about it. And here I'm talking just very simply investing in and buying into the cryptocurrency, so purchasing the coins themselves, and the two different ways we see people do it. But there's other ways to invest in cryptocurrency too. There's private placements into cryptocurrency, for example, cryptocurrency investing and cryptocurrency mining and the technology behind those types of investments. We've seen things of that nature for, I would say, several years at this point. But when we're looking at the actual coins, so to speak, there are two ways that our clients are investing. The first way is setting up a checkbook control LLC. And for those of you that are not familiar with a checkbook control IRA or a single member LLC for checkbook control, I'm going to go into more detail when I talk about deal structures. So don't worry, you're not going to be behind. I'm going to catch you up when we get to the deal structuring for these unique investments. But just sort of a little bit of details now. When you're investing in cryptocurrency, you can use a checkbook control LLC, so setting up a single member LLC for the purpose of the IRA. The IRA is the member or owner of that LLC, and you can be the manager if you choose to be. The LLC has a bank account or a checking account, and the money from your IRA funds that checking account, and then from there, you can use that LLC to invest into crypto trading platforms. And the reason that we see this a lot is because the LLC sort of has the benefit of almost being universally accepted by trading platforms. And I'll talk about why the IRA might not be in just a second, but that's why we typically would see the LLC used. You can name the LLC whatever you want. So we actually don't really want to see you put, IRA in the name of the LLC, but other than that, we leave it up to you. So it could be Sunshine LLC, it could be, my investments LLC, whatever it is that you want to name it. And then the IRA does have a specific titling. We're going to tell you what that titling is. And then you put that in the member information. It is a manager managed LLC. And again, you can choose to be the manager if you'd like. And once that's set up, we see the operating agreement. We sign off on it on behalf of the IRA. You open the checking account, we fund the checking account, and now that LLC can set up profiles with the crypto trading platforms of your choosing to make those investments, so that that profile with your platform is going to be in the name of the LLC. So if I create an LLC in the name of Sunshine LLC, well, then the profile that I set up with the trading platform would be Sunshine LLC. The second way is investing directly through the IRA. So the IRA can invest directly by setting up the trading profile in the name of the retirement account. And this is very important. It would be Advanta IRA, FBO, your name, and your IRA account number. That is the way the trading platform profile needs to be set up prior to funding. The wallet for that investment will also need to be held in the name of the IRA. Again, very important. This is demonstrating to the IRS that those investments are actually a part of your retirement account. So we give you that specific titling when you establish an account. You're going to take that and establish the third-party trading profile as well as your crypto wallet in the name of the IRA. The reason that we sometimes see hiccups with investing directly through the IRA is just very simply that cryptocurrency platforms are fairly new. I know they've been around for about 10 years or so now, but just in the grand scheme of things, they are fairly new and they are unfamiliar with self-directed IRAs. And so they are typically unwilling to accept funding to the profile from a third party like an IRA. So they want to be able to, put your name to the bank account where the money is coming from. But if the if the platform that you're looking at investing with will accept a third party wire, then you can certainly do it in the name of the IRA, as long as, again, you can title your trading profile and wallet in the name of the retirement account. Next, we're going to move on to farm animals and land and those unique investments that we see that are tied to agriculture and sort of beyond. And so what we have seen people very creatively do is, again, investing in what they know best, buy things like shares in cattle and racehorses. I had a client who set up an LLC, and the LLC was invested into shares of a racehorse. And I thought that was very creative, and that was also sort of the world they lived in. They understood racehorses, they understood the risks and the growth associated with that investment. Same exact thing for cattle. And, as I go through these unique investments, just keep in mind that there are going to be some restrictions, there are some rules, and sort of disqualified persons and prohibited transactions when it comes to making investments in an IRA. They're not limited to these unique investments, but all investments in an IRA. And I will talk about those rules in just a few minutes. But moving on, we've also seen loans secured by alpaca. We had a client purchase bull semen for resale in his retirement account. We have seen farmland purchased for lease to local farmers, and that's something, again, tied to real estate, and something we see actually quite frequently, because if you know farmland and you know the area you're buying in, and you purchase land that you could easily um, lease to local farmers, have some sort of agreement, then that is certainly something that an IRA can do, and we do see. We also have seen land purchased and leased to hunters. We've seen land purchased with timber on it, and they sell the timber rights, or they have a joint venture agreement with somebody local who will harvest the timber. Something similar that I've seen is with orange groves. We had a client purchase orange groves in their retirement account, and then they had a contract with a local farmer to do the harvest, and they split the profits. So very interesting, very unique investment that we see. I did have a question pop up about cold storage for cryptocurrencies, and does the cold wallet use the LLC or the IRA name? And thank you for the question. The answer is, it would depend. If you use the LLC, then yes, that would need to be in the name of the LLC. If you use the IRA directly, it would be in the name of the IRA. But I would suggest getting a professional's opinion on utilizing cold storage for your cryptocurrency as it relates to your IRA. So just a suggestion. And then also making sure that if you're using cold storage, that you are also not mixing your personal crypto investments with any IRA investments that you have. Another type of unique investment that we have seen is into vineyards. And I think that this is sort of something that we'll probably see more and more. We've definitely seen investments into breweries as well. But, again, there's a couple different ways that we've seen it done, where maybe there's a private offering raising capital to either purchase land for a vineyard or purchase equipment for the vineyard or whatever it might be. We also have clients invest in farmland again and lease it to the vineyard. And so there's a couple different ways that we would see that done. So going into transportation, and I think these are just very creative deals, very unique situations, and profitable for our clients. Um, we had a gentleman who had a transport business with a contract to move cars from a local train station to the local dealerships nearby, and he needed more car carriers for his business, but he didn't have the capital to purchase the trucks. He had a lot of friends that wanted to get involved in the business for investment purposes. And so what they decided to do was actually purchase the car carrier trucks and lease them back to his business. So, and again, I'm going to talk about disqualified persons and prohibited transactions and how that works, but essentially it has to all be done by third parties. So, if you have you're going to purchase an IRA or something in your IRA that is like an 18-wheeler, a car carrier, then you're going to have to work out how that investment is going to be structured so that you are at arm's length from that transaction at all times. And so that's very important when you're looking at IRA investments. And so in this structure, again, his friends purchased the 18-wheelers, and then very simply, he leased those from friends' IRAs, and the IRAs received the investment income. Um, the other deal that I have seen that it was very similar is an 18-wheeler mechanic found trucks at a discount. He purchased them through his retirement account to be then resold after a third-party mechanic did the repairs. So in this situation, again, arm's length transaction, making sure that he is always sort of dealing with third parties for those investments. He's not transporting the trucks himself. Any repairs that needed to be done for those 18 wheelers that he bought at a discount needed to be paid for by the IRA. And then when it's sold, he can't drive the 18 wheeler to the buyer. He has to arrange for either a third party to assist him. At that time, the third party would need to be paid by the IRA, or the buyer could simply pick it up. But just keeping all of those things in mind, and we'll be talking more specifically about that in just a minute. Our next example for transportation is airplane purchase through an IRA. And this client did use a single member LLC, but the deal was basically explained as such. The IRA holder created the single member LLC, and again, we'll talk about that more specifically in just a few minutes, but setting up the single member LLC, the IRA is the sole member with the IRA holder possibly as the manager. With that said, the IRA LLC will create a bank account. The IRA will fund it, and then the manager of that LLC will direct the funds. In this case, paying a non-disqualified third-party pilot to fly it where he had arranged storage at a small airport or airfield. And again, IRA is paying 100% of these expenses. He also paid for the pilot to fly back home, paid the airport and airfield to store the plane, sold the plane, and the buyer went and picked it up. So very creative, very interesting deal. And again, this one was done through a single member LLC. I love this example. I think that when the deal was done, we really sort of got a great story out of it. And also something that I personally didn't know is that burial crypts can sometimes be deeded like real estate. So we had a client who found an opportunity to buy two side-by-side burial crypts. They were selling at a premium, but he was able to buy them at a discount. So he found somebody that he knew, maybe through association of, living around there or maybe attending a church or something like that, that they were wanting to get rid of or liquidate their burial crypts. And so he was able to buy them quickly and therefore get them at a discount. And when he did that, he eventually found a buyer and made a profit. But don't forget, no personal use, guys. So, he couldn't use those crypts himself, but he could certainly resell them for a profit. So now we're going to talk about, and I do have one more example of a unique investment. I'm going to go through the movie project investment for you guys, but just really sort of to give you an idea of the different deal structures that we see. We'll talk about the rules and possible tax liability. And I think that's important because a lot of times, not just with unique investments, but also with real estate, when we're making these investments, there is the possibility that we expose the IRA account to a tax called UBIT, or it's sometimes also called UDFI, an unrelated business income tax. And it may apply in some situations. So I'll go over that with you as well. So LLCs, private placements, and more, different deal structures for different investments. And again, we'll talk about single member LLCs, but also what about those private offerings that we talked about? What does that look like? What kind of paperwork is involved? Prohibited transactions and disqualified persons. Again, remember we talked about third-party transactions, sort of hands-off as far as IRA investments are concerned. And then again, UBIT and the possibility of exposing the IRA to a tax. So we'll go over the deal structures for limited partnerships and LLCs. And this is something you'll see a lot with the unique investment. So, something like investing into a private offering for a vineyard, that's typically going to be something like a limited partnership. It could be structured other ways as well. It could be maybe something like an unsecured note to the company or business. It could be, shares in the LLC. There's a lot of different ways it can be done. You can use a single member LLC to then in turn make the investments like limited partnership investments and so on. But ultimately, this will give you an idea of what that paperwork looks like. So again, using the movie project as an example, Joe opens and funds an IRA account. He completes an IRA application. he transfers or rollovers funds from an existing IRA or an old 401k, and he gets an account number issued for that account. From there, Joe is going to review all of the investment paperwork. So if this is a limited partnership, there's going to be a limited partnership agreement, possibly a private placement memorandum outlining sort of the investment goals, what's involved, all of the important things that Joe will want to review and ask questions of the offering to make sure that he is comfortable with the investment. Remember at the beginning, I talked about how we don't do any due diligence and how if you have investment, tax, or legal advice, that's when you need to consult with your professional team. And so that's what Joe is going to do here. He's going to review the private placement memorandum and the limited partnership agreement. He's going to make sure that he's comfortable with the investment, looking at how far into the future, for example, plans go for this private placement, etc. And then from there, he's going to approve all of the paperwork for us. We do that all over DocuSign now, so we can send it back to him. He will approve it. From there, we're going to help make sure that his IRA is titled as the investor rather than him personally. So with a limited partnership, his IRA would be something that would be listed as the limited partner. After Joe has approved everything and we put his IRA in all of the important places on that paperwork, we're going to sign on behalf of the IRA and fund the investment. And then from there, the IRA is going to receive any of the income. And once the private placement is closed, it will receive all of the proceeds back to the retirement account. And Joe is ready to invest in his next project. I had a question pop up. Intellectual property, is that allowed? It depends. I think I probably need to know a little more detail on that. So if you would send me an email or give me a call directly and we can talk offline about that. It could maybe be possible if you're buying somebody else's intellectual property, so you're sort of making an investment into that intellectual property. If it's your own intellectual property, no. So I think I need some more details on that. Another question that popped up, foreign real estate. Yeah, absolutely. I have clients invested in Costa Rica. I have clients invested in India. Off the top of my head, I can't think of where else, but yes, absolutely, real estate is allowed. Oh, Argentina, I think I have client invested in Argentina. So absolutely, that's allowed. Usually what I tell people is we're not going to look into what each country requires in order for you to make that investment. So be familiar with their local real estate laws. Maybe have a local representative assist you with that purchase. We'll help you on the IRA side, but you need to have somebody professional help you on the real estate side of things. So using checkbook control LLC or a single member LLC, we see this a lot for a couple different reasons. When people really want sort of the ultimate control over their IRA, so they want the ability to write a check, over a cup of coffee and a handshake, doing a deal very quickly. They want that ability to act quickly and not come back to Advanta IRA and say, let me fill out your paperwork. How long is this going to take? Now, that being said, we can fund a transaction within 24 to 48 hours. So I don't feel that you necessarily need checkbook control to really have quick control and access over your IRA, but some people really like that ability, and so that's certainly fine. And again, bringing in your professional team to give you advice on this is always recommended. Another reason we see checkbook control again is when people are looking at investments where maybe they need to do it or they prefer to do it. So, again, the cryptocurrency issue of the third party wire, if that's not going to work and you're adamant you want to work with a specific trading platform, then looking at something like having checkbook control through an LLC might work for you. Other investments, again, including having multiple investments where you could save on fees. And so there's a lot of pros, but also there's cons to this method as well. I'm not going to go into all of that today, but we do have a seminar we do, and it is archived to our YouTube channel on having checkbook control of your retirement accounts. Is something you could definitely check out on your own time, or email or call me with questions on checkbook control. But again, remember, it has pros and cons. It is something that might work for you, but you want to be aware of the rules and the way that it works. So again, Joe works with a professional to form an LLC and create an operating agreement. We do not set up the LLC. This sort of falls in line with our not giving legal advice. But if you are looking for a professional to assist you, we can definitely refer you to professionals who have assisted our clients in the past and are familiar with self-directed IRAs. The LLC operating agreement is very important. I know a lot of times when people hear about this strategy, they say, I've done LLCs a million times before. That's no problem. But what we're going to be specifically looking for here is the operating agreement. And that's very important because the operating agreement is going to show who the member is, who the manager is, and what everybody's role is. And that's going to be super important. And so if you haven't done an operating agreement before, that's what we're going to be looking for the IRA. Again, the IRA is going to be titled very specifically as the member or owner. You can also partner into an LLC. So if you were looking to sort of partner funds, you might do that through an LLC in order to make investments with others, and that might be somebody disqualified to you or some third party. And again, I'm not going to talk about how partnering works today, but it is something that is certainly possible. And then after you have the operating agreement ready to go, you send it to Advanta IRA. We'll review it to make sure that the IRA is properly represented as the member. Once that's done, we'll give you the okay to open the bank account, and we will fund the LLC bank account. Again, it's up to you what you name the LLC. So if you form Sunshine LLC, then you form Sunshine LLC bank account. We'll send the funds over there, and you are ready to invest. From there, the investments are made in the name of the LLC. And remember that we named the IRA as the member to that LLC, which is super important because then just by default, any investments made within the LLC are that of the IRAs. It's important that you're still abiding by the prohibited transaction and disqualified persons rules. Even within the LLC, I get that question a lot. Well, if I form an LLC, does that mean that I don't have to abide by the rules? And fortunately, unfortunately, that is not the case. The rules still do apply to the LLC, so you want to make sure that you're familiar with prohibited transaction and disqualified persons rules. From here, in this case, Joe is the manager, and so he will sign all investment documents on behalf of the LLC. He'll deposit funds into the LLC, he'll pay expenses on behalf of any investments, and he'll make investments, and he doesn't have to come to Advanta every time he's making an investment. So again, having checkbook control really does put you into that role, but you are also doing all the record keeping. So you want to make sure that you're keeping track of everything down to the penny in and out of the account, and that you're abiding by all of those rules. I had a question pop up on the LLC. Can you pay for the setup of the LLC from the Advanta IRA account? You probably should. I mean, I think that ultimately you can get advice from your attorney on this one, but if it's an expense of the IRA, it's probably something that you should pay for by the IRA. If you feel like it's an administrative cost and not necessarily needed to be paid by the IRA, again, I would just get a professional opinion on that, when you're making that decision. Things to remember with an LLC. Checkbook control, the IRA owns 100% of the LLC membership, and the IRA owner is typically named the manager. Again, you can name a third-party manager, but we're going to leave that up to you. It does allow the manager to write checks directly to fund investments, pay bills, sign contracts, all of the things that go with investing through your retirement account. What's important here is that you are not commingling your funds with IRA funds. So no, personal funds invested through the IRA checking account. And if you want to add to the LLC that is owned by your IRA, you definitely want to make sure that you're going first through your IRA administrator. So let's say that we funded your IRA with $100,000 and then in turn funded your single member LLC owned by your IRA with $100,000, but you wanted to add your annual contribution. You're not going to make your annual contribution directly through the LLC bank account, but instead you're going to make it with Advanta IRA so that we can do the reporting that's required on making that contribution, and we will then turn around and fund the LLC bank account. And that's same with any distributions you'd like to take. The money first needs to come back to the IRA and then request the distribution from Advanta, and we will turn that money around for you. If the IRA owner wants to be the manager, they should always check with an attorney when they're setting up the LLC. And a lot of times people will ask us, well, how do we know that this is something that the IRS has allowed. And you can look at these two court cases here where basically the IRS didn't necessarily like that the IRA holder was also the manager, but the tax court has allowed it in certain circumstances as long as you're not paying yourself a salary or doing anything prohibited within that LLC bank account. And again, you can learn more details if you check out our webinar on checkbook control. Self-directed IRA rules. Remember I said there was only two things you can't invest in a self-directed IRA. So two asset classes, and here they are: life insurance and collectibles. That's it. Outside of that, the sky is the limit. Again, as long as they're third-party transactions or considered arm's length, you are able to make those investments. So if you're looking at life insurance, that would be considered prohibited. And then again, collectibles, anything that is going to be valued based on its rarity or unique, um, placement, then that is definitely going to be something that's considered collectible and prohibited. I know that we have stamps and coins up here, but we're just talking there about the coins on how they might be considered rare or unique. And so if they are valued based on that, then they are probably going to be prohibited. But if it is something you're making an investment in that's based on the value of the metal itself, then that would be something probably allowed in the IRA account. We have a lot of people hold precious metals. They do so by purchasing through a dealer and then having a third party depository hold those precious metals for them. Disqualified persons. So who is considered disqualified to you and your IRA? Think back on our unique investments today and how we talked about having third-party transportation or arranging for third-party help with making the investment. So who's transporting the airplane? How is it being stored? Where is it being stored? Who is responsible for the care of those animals like the racehorses, the cattle, alpaca? All of these things need to be arranged with a third party. The IRA holder should not be out there providing sweat equity to their retirement account. And that's super important because the IRS just very simply does not allow sweat equity from a disqualified person, and that includes the IRA holder. So take a look at my picture here, and you can see the IRA holder, their spouse, and then up and down your lineal tree. So parents and grandparents, children and grandchildren, and any spouses or business entities of those are going to be considered disqualified persons and therefore prohibited from providing sweat equity to the IRA, from receiving a current benefit from the IRA, or transacting with the IRA, so providing goods and services, leases, etc. So again, always third-party transactions. So if we look back at our investment into the airplane, let's say the IRA holder's son was a pilot. He said, well, I'll pay my son fair market value for what I would have to pay another pilot to go out and fly the plane to the destination where I'll be holding it until I find a buyer. Unfortunately, even though they would like to pay fair market on that expense, it would still be prohibited, and that's very, very important. And then the next question I always get is, well, what if we don't pay them? Well, that would also be prohibited. No transacting, service providing, anything like that with a disqualified person. So very important that your IRA is always doing deals, transactions, hiring third parties. They are third parties of your choosing, but you want to make sure that they are considered unrelated to you and that you and these disqualified persons are not receiving a current benefit. So again, if we look back at the car carrier deal where the guy who had the contract with moving cars from the local train station to local dealerships needed more car carriers, who cannot invest with him? Well, it's very important that he is not bringing in, for example, his kids' IRAs to buy the car carriers because his business would not be allowed to lease those car carriers from his children's IRA accounts because they're considered disqualified. Again, looking at the 18-wheeler mechanic who purchased the trucks at a discount, had them repaired and then resold, he was using a third-party mechanic to do those repairs. He was not providing the sweat equity or doing the repairs himself. He also was not storing those trucks while he was looking for buyers. And when the buyers were found, they simply picked up the trucks. He was not delivering them personally. I do also see that somebody raised their hand. I do not answer hand raises. Please just go ahead and type your question into the chat box for me. Again, I just like to keep everybody muted for the sake of the recording. If you look at this diagram, you'll see that brothers, sisters, aunts, uncles, and cousins are not considered disqualified individuals. And really what the IRS says is that there can't be a current benefit to the IRA holder, and there can't be, really sort of like an intrinsic benefit to the IRA holder for that investment. So if the pilot that purchased the plane had a brother who was also a pilot, and that brother was going to go out and fly the plane, well, then he would look and see what fair market value for that cost of that service would be. His IRA would pay his brother. There can't be a benefit to that transaction. It's going to be important there. And I had a couple questions pop up on who might be considered disqualified, and these are great questions. How about a domestic partner? Are they considered a spouse and therefore disqualified? And the answer is very gray. When you are looking at somebody that is considered a domestic partner, but you're not actually married in the eyes of the law, this is going to be considered a gray area. And the reason that I say that is because, is there a current benefit to you for making this investment or doing this transaction? Because remember, you as the IRA holder cannot have a current benefit. And so an easy example of that would be if you were going to lend your domestic partner money so that they could fix up the house that you live in. Well, you live in that house, so that's a benefit to you. If they were going to pay off credit card debt, well, that's a benefit to you. And so this is an extremely gray area. I really can't think of a scenario where it would work, but if it's something that you're thinking about, then I would definitely suggest getting an attorney involved to see if the structure of the deal you're looking at will work. I really can't think of an example where it would, but I am also not an ERISA attorney, so that's what I would suggest. Another question on sort of the same line, how about stepchildren and step-in-laws? Are they considered lineal descendants? If you have not legally adopted the children, then they are not necessarily considered disqualified. But again, is there a current benefit to that transaction? And this is a good one, again, to bring an attorney in on, because if you were going to, for example, lend a stepchild money so that they can purchase a home, is there a benefit to you, and your spouse for doing that transaction? Um, In-laws are not considered part of your lineal ascendants and descendants. However, it depends on who you're talking about doing the transaction. So a good example would be if I wanted to lend money to my mother-in-law. Well, she is not technically a lineal um, in my lineal family tree, right? Because she is my mother-in-law. However, again, is there a current benefit to me for doing that transaction? If my mother-in-law wanted to lend me money, well, I'm the spouse of her son, and therefore it's prohibited. So sort of just an interesting, quirky way the rules work. You really need to be looking at those current benefits and who might be considered disqualified when you're looking up and down your lineal tree. Okay, so then the sort of last point that I wanted to make here before we wrap it up is talking about unrelated business income tax. And not only, but especially when you have these unique investments, you might be looking at possibly exposing your IRA to unrelated business income tax or unrelated debt finance income tax. Ultimately, the tax is the same, it just occurs at different deal structures, I guess you could say. But UBIT applies when there is business income, not investment income, but business income being returned to the retirement account. So if there is a trade or business being operated through the retirement account, this is when you're going to expose the IRA to this tax, and it is at trust tax rates. It's possible to maybe get some deductions on this tax, but again, this is where I would bring in a CPA who is familiar with this tax and can assist you in understanding how the tax works. Because you want to make sure that before you're doing the deal that you understand the tax, you understand the additional filing that is going to need to take place in order for the IRA to pay the tax. So It is a tax to the IRA. It's not to you. It's not a personal liability, but it is to the IRA. The IRA will file an additional form and pay the tax every year. If you are investing passively and receiving shares or a limited partnership investment into something that might not be considered business income, but then again, it might be. So it might be something to look at. If you have an investment into an operating business where your IRA, is receiving business income, then you're going to have to talk to your CPA and find out about how that is structured and how it works. Another time the tax applies is unrelated debt finance income tax, which triggers UBIT. And that's when you have income from leveraged investments. And oftentimes we're talking about real estate. And so we talk about buying real estate with debt in order to make the purchase work. So if you had, for example, $100,000 and you wanted to buy a property for $150,000, well, then you might just get a non-recourse loan of $75,000 so that your IRA only has to put $75,000 down to purchase the property. Well, that's going to expose the IRA to this unrelated debt finance income tax. And therefore, the income on the property related to the amount of debt, so in my example, 50,000 or 50% at 75,000, means that 50% of your annual income is going to be taxable at trust tax rates. But it also, in the spirit of unique investments, is going to apply on any leveraged investment. So if you're investing into a limited partnership and part of their deal structure is to use debt to acquire properties or business or farmland or whatever it might be, then your IRA is possibly exposed to UBIT. If you are purchasing an airplane and you are buying it on seller financing, for example, that is going to be a leveraged investment and you're going to expose the IRA to this UBIT through unrelated debt finance income. Again, the IRA is going to file an additional tax form every year called 990T. It's possible to get some deductions, but you'll definitely want to work with a CPA that is familiar with UBIT and the way this works and filing the 990T so that you can make sure that you're factoring that into the investment prior to going forward. That's all I have on the schedule today for unique investments. So I'm going to tell you guys about some of our upcoming events now and give you time. If you have any other additional questions for me, please go ahead and make sure you type them into the chat box. We want to make sure that we get them all answered for you. We do have a lot of great events coming up. You can always find them at advantaira.com/events. We have our networking events every other Friday. So we do have one coming up on April 9th, and I will be hosting that alongside my associate, Alex Perney. The networking event, if you guys have not attended, is for everybody. It is on Zoom. Everybody has the opportunity, if they want to pitch deals they have, talk about what they're looking for, talk about services they can provide, and share contact information. We have a great time on the calls. We have anywhere from 40 to 100 people online, depending on the week. And they are every other Friday. You'll find them listed in our event calendar, advantaira.com/events. You can also check out our video library where we save all of our videos. All of our webinars are archived there, and they're also on our YouTube channel. And then also check out our blog articles where we're talking about the latest on investments, any updates like tax filing being pushed back, and all of the things that go along with self-directed retirement accounts. I don't see any additional questions, but I did want to post my contact information online again for you guys. Again, if you would like the slides to this presentation, I am happy to share them. Send me an email or give me a call, and I will shoot them over to you. If you have additional questions for me on different deal structures that will work within an IRA account, or if you have questions on just very simply other types of self-directed assets, I'd be happy to answer your questions at any time, and I would encourage everybody to check out our website and join us for our upcoming events. Thank you so much for attending, and we look forward to seeing you on our next event.